Welcome guys, welcome to the trading room for the midweek update. It's the 5th of July. We are finished 6 months of 2023, and I just don't know what else to say, but it was absolutely straight up. The expectations for, oh gosh, we do a year in review every year, and I believe we were a little bit more pessimistic, thinking that we might see some pretty aggressive sell-off at the beginning of the year and maybe a retracement, and we got a little bit of a sell-off. I'm not sure exactly when, maybe February into March a little bit, but boy, not even worth talking about as we just turned around and we took off. So it's been a very, very, very bullish 6 months for 2023. Let's see where the rest goes.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
That being said, this is opinion. This is sharing. Take responsibility for what you get. You know the drill. So let's just do a breakdown. This is going to be, these are difficult classes to teach as we have basically had a half of a day. We had a half day Monday, nothing for the holiday yesterday, and so here we are today, earlier in the morning here, about halfway through this day. So we're not going to see too much of a change when it comes from Wednesday to Wednesday, but we can talk about what happened Thursday and Friday going into the weekend before the holiday. So we're finding a little bit of hesitation. You're going to see this in a minute here on the charts, but the bullish trends do continue out of the holiday. Well, sentiment is absolutely bullish. We're seeing some confidence in there. That PCE number that came in line, I really think kind of gave the markets a green light for anyone, including myself, that was hesitant on inflationary stress. We also did see that mirrored in the 10-year yields. So we're not seeing inflation impact into notes and the banks as well as we would expect them to. We do have a Fed that's going to raise. The markets expect it, but we're seeing a lot of strength in a lot of reports, and I'm going to say it because I've never seen one before, but it looks like we're on route for a soft landing. And I think the Fed is confident with that. We'll see. There's going to be some more Fed speak this week, and a couple more indicators. We'll talk about those in a minute, but we'll see what the overall motion of the ocean just feels like. The markets have been, confirmed correct of their bullish outlook for the beginning of for the first half of the year, and continue to have this bullish confidence with it, which is great. That's fine. We'll just stay on board of it and move higher. Interest rates remain flat. Like I say, that bottom thing is, it's pretty interesting to see them not participate. If this was indeed a little bit too hot, the Fed's not acting fast enough, I think we'd see reaction. And we still could, but we would see reaction first in interest rates when it comes to yields. Those would spike. But there are numbers out there that can change this, so we'll keep an eye on it. For now, we got to kind of leave it where it's at. Since I'm on this slide, we'll talk. Brett's got a question here. Do you feel like there's a lot of rebalancing occurring right now? He's got some of his bulls and bears going the wrong directions. And my answer is yeah. I do believe that we just finished the first half of the year. If you've got institutional money out there, it's going to pull some profits in some areas. I don't think it's going to be enough to really change your bulls from bulls to bears, but you might see hesitation in some of the moves that you'd expect. So the markets might be a little bit higher, but you might see some of your bulls aren't participating. That's fine. Be patient, because the next week or the week after that, or with the market moving lower, you might see your bulls move back up. I don't think it's a panic flush. I don't see all the strong sectors being liquidated and all the weak sectors being purchased. It's not that, but you might see this very lightly. That's where you have to be kind of stubbornly bullish in your longer term positions. So Brett and anybody else that's expecting this, if you have to err to the bull side and be patient with it. It's one of these things where if the markets go up 2%, well, maybe not that, even 1% or 0.5%, and you did not see that your bulls participated that day, it doesn't mean that they're being abandoned. It just might mean that they might be taking a breather, or you might see some rotation I don't want to call it rotation, but profits being taken and put other places. Definitely see that at markets that are at their highs, which we're at. So let's get to it, folks, and we'll break it down. The first thing I want to do is, good question, by the way, Brett. Thanks for sharing. First thing I want to do is just go through all of our trade ideas. And I've got nothing up here, but folks, we're going to look at all of them because we had a whole bunch from last week, and we've only seen it for 2.5 days. So let's see what's happened over that time frame. Let's go ahead and close this bad boy here, and we're just going to bounce through these. Now, if you guys have your list in front of you, great. If not, here it comes. We're going to start with A, B, and B. And I'm seriously just going to go straight down the bulls and straight down the bears, and we'll see where we're at. This one has been strong, and it continues to be strong. We talked about it maybe breaking above its resistance channel, and lo and behold, it has. This has been a great trade. It's been a good winner for a while as far as the diagonal spread, and it looks perfect here above the 130 mark. A little bit of a hesitation today, an inside day, that's fine. Coming out of the holiday, we had a half a day here, and today is our first full day. We're not done yet. I would expect this to stay red. I would expect it maybe to pin here at the 130, stay sideways, even with strength. For it to shoot up to 140 today or the rest of this week is probably not going to happen. But boy, sideways to up on this, it still looks really, really good. Great job out there. Let's go to BKR. This is Baker Hughes. Let me jump into this. We'll zoom on in. Same idea. I'll get a pin going here. I like being obnoxious with a pin. Same idea here. Let's see if I can get that line to go straight. There it is. Right through here. Broke out before last week when we were talking about it, and it's having this exact retracement slowly back down to that resistance area. This is beautiful for you guys who diagonal spreaded this or even targeted with a butterfly. Time is on your side, even your vertical spread, guys. It's nice to have this. Pulling back's fine. It needs to decay. You need that theta to go away. So it's in a great situation. It's looking pretty good. Still nice. Anybody who wants a bull, this is still a good candidate. DraftKings. I know there's probably 2 or 3 of you that have these positions and have had them for weeks. If so, congratulations. Here it is again, DraftKings in a pullback. The discussion with this came quite a while ago, talking about maybe flirting with this. This was the first pullback we discussed, maybe a breakout above here, and it looks like it almost did. And here it comes back, right back to another pullback around this rising 20-day moving average. Another opportunity for people who like the bull pullback. It looks like it's on its way to do that, so be patient with it. However, I like the overall consolidation area that's going on right through here. So diagonal spreads would be great. Targeted butterflies is awesome in these situations, and you can let this pull back and move higher. For you traders that want to get into something now without the quote-unquote confirmation of price action moving above a candlestick, targeted butterflies are great for that because a lot of it is time sensitive. Just pick your time frame, week out, 2 weeks out, whatever it is. Shoot your target and throw it out there. Diagonal spreads also can be put off a little earlier. With a diagonal spread, though, me personally, I'd like to see a little bit of confirmation in the direction before I place that. People that put them on earlier, they'd have to sit through and make, I shouldn't say hope, but that's kind of the word, that it does turn around at some point. So a little bit more price action, I believe, needed for more of a directional trade. Duh, tell me something you don't know, right? Okay. Moving along, who's next? Microsoft. Another good trade. It's chomping around a little bit. This one, back to Brett's question. Hey, I'm feeling like there's some stuff moving back and forth and in and out. This is one you're going to see. Microsoft has been very, very good for a long while, but it's also a very widely held stock. It's in many, many ETFs, many, many funds, all sorts of stuff. So you see these things. Look at this gap down this morning and then a move immediately back up. You just have to sit patiently through this. But overall, take a look at the overall pattern. Is it still bullish in this case? Absolutely. It looked like it was going to pull back yesterday with that half day. And this morning, it looks like it's at that threatening the 20-day and could fall all the way back down. But keep your eyes on support and resistance. Be patient with this. That's a support level right through here. This could be a minor support level as well. We got the 20-day moving average. So you've got areas this could pull back to without it breaking trend. right? Take a look at that 50-day moving average. This just shows you this has just been slowly acquired, nice and steady, very confident, very strong stock. Where it's at right now, yeah, sure, it's not making too big of an up and down move, a lot of consolidation. In fact, folks, once we get to the overall markets, you'll see that we are kind of pinned up at previous highs. Not really doing much. We went into a holiday. This holiday could have been extended Monday into Tuesday. I know the majority of people that I worked with or that I have had contact with didn't even work Monday into Tuesday. So we might just be coming out of that. But the choppiness doesn't mean weakness. It just means it's trying to gather strength or consolidate before it moves higher. So still feasible. Let's get to IYC. I thought this was cool. The consumer discretionary ETF. Look at that breakout. It sucks when you guys are this right. Right? But beautiful. Saying, hey, there could be some pressure here as far as a breakout goes. And lo and behold, this thing took a little bit, but it did. It broke out finally on Friday. Here is Monday's action. And then today, a little bit of a hesitation. So anybody that played it on this little shadow, and I believe that's Wednesday, right? Wednesday, Thursday, Friday, for sure. Got into it. I'm jealous. Good for you. This was one that wasn't on my list. I took off early on the weekend, and I paid for it, didn't I? Wasn't able to catch this. Still looks pretty good. A little overextended for somebody who's looking at it today. Wait for it to consolidate or even pull back. But anybody that's in there right now, I'll say it again. If you haven't taken a vacation, it's mid-July here, or beginning of July, I should say. Take your vacation, right? Just, you're okay. You can watch the markets. If the markets want to correct in the next month or so, we'll be here. But for anybody that's got primarily bullish exposure, it's I don't know. I don't want to say it's safe because anything can come out of anywhere, but there's just not a lot out there that can knock these markets down, or not a lot of fear. Here's Caterpillar. This was on our bear watch quite for the majority of this year, right? Basically since March into April, May, going into the beginning of June. And then we had this little bit of a hiccup, and we discussed this when that happened, saying it looks like there's a lot of purchasing off the bottom. I truly believe that's when the market sentiment changed for the bull side. Throughout the whole, I'm not worried about inflation, I'm not worried about a slowdown in the economy. That's right about here, and we saw pretty good investment in some of these weaker sectors. So here we go, pullback, confirmation of a higher low. A very aggressive confirmation of a higher low. Averages flip-flopped aggressively. It's shooting up higher. It looks like it wants to roll over, but it's comfortable between this 240 and 250. It's a little bit hesitant, but playing the bull pullback, talking about it here on Wednesday, it's still very feasible. Looks like it just might take a breath. Still strong. Still looks clean. Still looks good. All right, let's move on. I've got a lot. I forgot about how many we had. ENTG. Let's see if I got that right. Okay, yeah. Okay. This one looks like it's pulling back a little bit, but it's still above that 20-day moving average. Still looking like, hey, this might be a little bit more of a consolidation in the shorter term, but we have a target here. Nice little bounce. I think we discussed this shoulder line on Wednesday, thinking that I might hesitate here, and lo and behold, folks, it is. Doesn't mean it needs to go back to 105 before it can consolidate or move higher. So it's still feasible. However, if you're in it, be confident and comfortable. It's going to do what it does. If you're not in it, let's be a little bit patient and see if we can't get back above the shoulder line. Now's the chance, because this could gather enough. I thought I erased that. Hold on, folks. Let me erase the line. This could gather enough strength just with consolidation or a little bit of a pullback to surge higher. So anybody that was worried about this the first time we talked about it, it looks like it is addressing that. So why don't we just wait for that to be our entry as it moves higher? If we break the shoulder, this line that I just drew, this one here, I think that it has no problem breaking through that 115 if it can consolidate where it's at and shoot higher. If it pulls back a little bit more to the 105, we might have a little bit more of a play before it can do something. Be patient. Be patient. Okay, CFLT, I believe. Another bull. This one's also doing a little bit of a consolidation pullback. We were talking about it as a little bit of a bull pullback to this area. Had a really nice candle there on, I believe that's Tuesday, and then Wednesday, Thursday, Friday. No, that's Wednesday. So it was confirming. It looks like it's just kind of spilling over. That's fine. This is your line in the sand here, right through here, this pivot point. It'd be nice to see it stay above that 20-day, maybe play this game, and move higher. It's early yet. We just came back from a holiday. I'm going to say it 100 times. We do have today and 2 more days and a couple of economic announcements. Well, they're ones that are expected to be in line, but we'll see where the sentiment of the market is for the rest of this week. Right now, it just came right out of where we left it. Right, moving on. QSR. Here's QSR. It's in a pullback. Had a really nice bull pullback confirmed to the upside. Did it break? I think it did. It did. So it broke out and we're pulling back. Still great, still feasible, still a really good bull. For you guys that are in it, wait for it to pull back again and turn. Maybe if it touches this 20-day. For you that are in it, great work. Hopefully you got a diagonal or some sort of a vertical, something that could decay. Sitting pretty. Moving on. GE. Only got 3 more on the bulls, and then we got a bunch of bears as well. So it's not all bullish out there, guys. There are some bear trades. However, if you're going to make a mistake, do it to the bull side. Nice breakout when we were talking about it. Here is Friday, Monday, and today. Once a stock breaks out, the first thing it usually does is correct or consolidate. This is perfect. Great if you're in a diagonal spread and you've got something expiring on Friday. Let's say you sold the 110. You're super happy. If you did the 105, 110, you've hit this perfectly. Vertical spread, still perfect. Targeted butterfly, looking good. So great work, guys. GE's awesome. Okay, let's go to our next. FT&T, and then CAH is our last. Same as the others. All broke out, all confirmed. Expectations of reaching a target might have hit it for you guys that are shorter term with most of these, but I like to play the slower play of a diagonal spread or targeted butterfly. It's pulling back. I don't know what else to say about that. It's exactly like the last few we've looked at. Let's see if CAH is as well. Cardinal Health seems to be a little bit stronger as it doesn't want to pull back. It wants to consolidate. But understand, sideways price action is the same. It does draw power and regain breath before another push higher it can. Consolidation is a little bit more strong than pullback. However, a pullback can stimulate or trigger more buying for people looking for a cheaper price. So usually I find with a pullback, you get a healthier surge to the upside. Consolidation, usually you can get a break, and it's usually in euphoric states, like in NVIDIA. If NVIDIA consolidates, it's going to explode to the upside. If something like Microsoft pulls back, it'll probably have a bigger move to the upside than if it consolidates. The reason being is because one might just be right on everybody's watch list, and everybody's dying to get into the darling of the day or the week or the month. So, but hey, all good. These are still feasible, and these look nice. Let's move over to the bear side here. Right, and Allstate. Very nice. Bears are going to be hurting, right? Because, geez, Joe, this was a bear trade, but I'm waiting for it to consolidate and roll over. If you did get into it, you're not down a lot. And look at this pattern. It's beautiful. It's still trading below its 20-day moving average. I'll tell you what. Monday's price action's nice. Look at this candle. It closed just above the 20-day, and today it's rolling back down from it. Nice little bear rally. Still in there. I mean, even if this gets a little higher, it's still feasible as a bear. So, still like it. Still works. Great work. Let's move to GDX. Now, some of these I haven't looked at yet, folks. I just wanted to go through them as a class. This one I would expect to be a little higher. Oh, that's a nice little recap, though, a little bounce. So look at that oversold or short cover rally, whatever you guys want to call that. Big moves on low volume. It's nice to see that. That's very typical of a short cover rally. Just bump, and then right back to business as usual. So anybody that's looking to get in short on this, looks good. Check out. I'm zooming in a little bit more to see if that is actually a bearish engulfing pattern. So confirmation would be a little bit lower or below that 30 again, either today or probably tomorrow. I'd like to see it in a second candle. But right back targeted 29, something sideways to down. Looks very nice. ExxonMobil. Let's see. Oops. completed its bear rally. A little bit more aggressive. Very strong bounce off that support. I think we're expecting a rollover right through this consolidation area of the 20. It looks like it made it to its 50, obviously. But it's struggling. Take a look at Friday, Monday, and today. Those are really good signs. Just that 108 and that falling 50-day moving average, a very strong argument for a bear move. Now, will it hang itself up on the 20-day moving average? It might. It's specific to gas, right? Energy. We did see a move in oil. It's I think it's about $72 a barrel now from like 69. So it's a good little bump, and that's what we could have seen here the end of last week. I still like it. Still bearish. Still in the bearish trend. FSLR. Okay. Bear rally hit its first target here at 180 that we discussed over the last week. So if anybody took that, that's great. Waiting for the bear rally back up. Looks like we're about to get confirmation that it's going to roll over between its 20 and its 50. Another opportunity for this to roll over and go back to 180. It's setting up great. Anybody that was looking for a breakdown, this rally probably hurts a little bit, but if you've diagonal spreaded it or targeted it, you can just kind of just wait for it to go. You're technically not out of the downtrend. So anybody that isn't and wants to get into this, wait for confirmation. If this goes down and closes where its low is today, that's confirmation. If not, you might need another candle. See where these markets go. We'll take a look at the markets in a minute, but I think they're rolling over a little bit. We'll see here. Disney. More of a sideways move from where it was at. Had the 3-day bounce. This one's looking a little stronger, but we do have the inside day. That is a pregnant bear, right? A bearish Harami pattern. So confirmation would be a break below the low of today's candle with a move down tomorrow. It's still technically in its bearish trend. It's still below its averages. It's a good opportunity. But if you guys have noticed, a lot of our bears are in the retracement pattern, which is expected. When you have the market showing a strength that they have, that's exactly what we expect. So be patient. One of those things where, was it Brett? Yeah, Brett had a great comment there saying, hey, some of my bears and my bulls are going opposite directions. That's because they're correcting. There's a little corrective action. Just be patient. They'll go back to where they're supposed to be. Here's OKTA, consolidating sideways. I think I made mention of this last week. This feels like it's waiting for something. It's got me a little bit tentative, the way that it's just pinned at the 70. I don't know if it's waiting for news or some sort of announcement or acquisition or who knows. So do some deeper research on this, guys. But sideways to down is the pattern. Absolutely. Okay, 3M. Oops, that's 2 of 3. Let's get one more up there. There we go. By the way, Disney and OKTA and 3M are sideways as well. So I do like them, and I still like them as sideways to bearish. This one I loved more sideways because of this little button that it set here. But it looks like it really wants to roll over. And look at these crosses. It's about to cross bullish again, and it might not make it. This little slant might show that, hey, it might roll back down. Now, for you guys that are Bollinger Bands traders, this is pretty tight to that upper Bollinger Band. If you wanted to be a little bit more reserved, and I think just wait for it to come all the way down and break, and that could happen in 1 or 2 days. If you want to be a little bit more range specific, this is confirming off of this resistance area. You could have a short-term target back here at 98, about $2. Right. So either play it slowly back down to this area, you can play the break to the downside. Your call. I do like it. Do like it. All right, almost through the list. Can you believe it? Okay, CVS, so sideways to down on 3M as well. CVS is sideways to down. This one is in a bear rally, which once again, this feel like your bears are going against you because they kind of are. That's all right. A little bit of a rally here. Boy, that gap looked really decent, and I was hoping it would roll over, but it hasn't yet. Looks like we got a bullish attempt to do a crossover, but there's pretty good resistance at 70. Be patient on this one. If you're sideways already in it to down, you're great. You're sitting sweet. If you want to look into this as a new trade to the down or sideways, wait for it to confirm a rollover at 70. right? Cool. VFC. Whoops. And then Alcoa is our last. Another one sideways to down. Zoom on in. Wow, that looks really nice. Retracement on today's action is a little bit discerning, but it's still below that 20-day moving average. It looks a little bit weak. We'll see where this closes. That's what's so neat about confirmation on closing, folks. You can actually watch and see how they finish. 18 is your first target on that. That's where I believe that's why we said sideways, just in case that does hold in. And we play this between 20 and 18 game. And then sideways does work. So targeted butterfly of 18. You could do, if you're bearish, right? A diagonal 1918, something like that. But it looks good. And Alcoa. And that's it. And then I'll go and we'll take a look at some of yours since we're already here. Well, I'll go back and I'll finish the class and then we'll come back out. Because we got to pull, right? We got to pull the class and all that fun stuff. Okay, Alcoa, you could justify sideways on this. It wasn't. We had it as just a bear, and I imagine it was due to thinking it would hit this 20 and go for it. But now it looks like it's established a little bit of a hiccup here. So sideways to down on Alcoa, fine. I do like the last couple of days price action. Cool. There's our list. Hopefully you wrote all those down. If you didn't, and you had the list from yesterday, it's the exact same one. Great work, guys. All right. I'm going to put this back to the home screen. Yeah, we rolled over a little bit in the last half hour-ish. But we'll see where we go from here. Cool. All right, guys, jumping straight back into the sector analysis. And the performance so far was kind of silly, as it is a half a day and a half a day. Wednesday, no movement. Dow, S&P, and the Qs absolutely flat. Russell, well, it's flat. Oil up 1.72%. Once again, remember, folks, last I checked it was about 69 a barrel. Now it's at 72, just shy of that. And gold, absolutely flat. So not a whole lot of motion at all to go off of. However, we do have the consolidation or continuation of these markets at their highs. This is super bullish. It's a big, eventful shoot up to the upside. Did we waste a lot of energy to get here very quickly? Absolutely. I think Friday pretty much exhausted every single seller that wanted to get in before the holiday weekend. They all came in at once, didn't they? So now I can talk to my bears, or at least my shorter-term retracement people. Yeah, it's exhausted itself. I would expect an immediate rollover on half-day Monday or even today. Today's not finished yet. We could. The reason being is because once the exhaustion happens, everybody that wanted in got in before the holiday weekend. Usually you have a lack of buying. I'm not seeing that so far today. There's still interest out there. There's still buying going on, which is why we have this little green candlestick. So where does that leave us? Well, you're just kind of up in this little island area here, but you are absolutely at resistance. This is very apparent on the SPY, as this gap appears to be a little bit more significant than in the Qs, which you'll see here in a minute, and the diamonds. So here's the diamonds. Why that gap is significant more than the SPY is because it made it to the top. The diamonds are still struggling. It looks like it's kind of rolling over, but these are green candles. Today's not over. This could be red, and I'm fine with that. I'm fine with a little corrective action or a pullback. We're absolutely due for it. It would be healthy in the overall bullish trend, especially where we were. Boy, I mean, this has just been a lot of up days in a row going into that holiday weekend. So the Qs is a little bit more uniform. It really hasn't participated. Rob made mention of this on Friday's class, saying that, look, the other markets have gone a lot higher than the Qs have, and that's because the Qs has been leading for so long. But one thing that I thought was of interest, it's actually a smoother pattern. Even with this gap, it's more of a nice slow move up to this area, which would warrant a little bit of a hesitation, a pullback, or a consolidation to show more strength before it moves higher. So where does that leave us? I mean, without showing my hand, it's exactly where I was last week, because the end of last week gave me my surge, and now I'm waiting for another corrective action or consolidation. All right, let's get into it, and then I'll show you our outlook. We'll pull the class. So what do we got as far as economic reports? They've been strong. They have been. Rob made mention on Friday, on the weekend class, about the new home sales. And I thought that was actually great. People are actually purchasing houses. Higher interest rates are out there, but they're not catastrophic. We're not seeing 7, 8%. We're still getting 5.5%, 6%. A lot of higher amounts of money down or secured loans. You could actually get lower than that. So you're not getting 2.8 and 3.2 anymore. But we're not paying 8, 9, which is what the worry was. They're sitting around 6, 5.5, depending on credit scores, stuff like that. I personally know a handful of people that just purchased homes, so it's still active. Now the manufacturing PMI in line. One thing that I saw here is a little bit of a slowdown, but take a look at this. Also a drop in production costs. That's a big sign. That's a big deal. I couldn't tell whether we're having a soft landing or it's overblown and the consumers exceeding what the Fed wants. But when you see manufacturing prices and costs of manufacturing go down, that's going to relate to lower prices to us. Well, it should, unless unless retailers keep prices higher, jack them up even higher, which I don't know they will. Construction spending, I expected that to go up, especially when it comes to that new home sales and contracts. We have a lot of active constructive, and it is cyclical. It is construction time, right? Over the summers, usually where it's highest. So we've got the OPEC meetings, whatever that is. Factory orders dropped slightly. FOMC minutes, we'll see what happens with that. Not a lot there. Coming up, we've got, where's my Fed speak? Well, let's talk about these first. We want the non-farm unemployment claims. We have the non-farm, ADP non-farm, and the non-farm employment change. So they're starting to separate those numbers. We do have ISM, and what else? I'm trying to think anything else. The JOLTS, job openings. So ones I'm going to look at are the claims, the ADP, and the JOLTS. Those seem to show, hey, are we contracting, expanding, or somewhere in between? Doesn't make a difference. I don't think these markets are really going to care. They know that the Fed is going to rate hike, and the markets I don't think care. Now, if there is worries or fear that the hike might be larger, we'll see that. But right now, not a lot of worry. Okay, so yeah, I guess it's just the FOMC minutes coming up here today, and that's about it. I'm trying to look through here, unless I'm not reading it, but we'll see. All right, let's go ahead and poll the class. Okay, 100% voted. Let's go ahead and close the poll and share. 75% plus 1, 50% 0, 13% negative 1. Okay. Definitely glass half full here. Plus 1. Awesome. Thanks, guys. So let's switch that over to monthly. It looks like I got 2 monthlies here. I don't think it matters which one I launch. There we go. Take a look at the monthly outlook. See what you guys are thinking overall. Okay, 100%, another 100% voted. Let's go ahead and close and share. And this is interesting, because the 75% is still at that plus 1, but we did get 50% at plus 2. So there's definitely going to be a plus 1, plus 2, more of a plus 2 monthly, and shorter term plus 1. Excellent. Thanks, guys. And I am right in the exact same lines. I moved to my 0. I could give up plus 1. Why am I 0? Because I'm expecting consolidation or correction this week. And I can actually justify that 0 with I'm comfortable with the positions and exposures I have. They're not all working for me, but I'm very, very confident and comfortable in the patterns I chose, the positions and strategies I used, as this is literally just a week you sit back and let your portfolio work. There's no guessing. There's no worries about managements. I don't need to just change, take profits. I just need to sit it out and let my portfolio work for me. So that's why I'm at that 0. I'm not going to do much. I expect consolidation. A pullback would make me what, folks? You should know by now, more bullish. A pullback in the markets after 1 or 2 days, I could see me moving to a plus 1 or even back up to a plus 2. Consolidation over a few days easily moves me up to plus 1, but I probably won't go to the plus 2. A breakout would move me to the plus 2. Plus 3 is very hard for me to get to because I'm just not a plus 3 guy. Isn't that weird? Plus 2 to me is about as bullish as I can be. I will go plus 3 if I see that pullback and see confirmation of it. If I get this, basically what we saw here again, I will briefly move this to a plus 3. and be happy about it. Just add bulls. But I'm pretty sure, folks, my actions are not going to be any different from yours based on my outlook. Might be a little less bullish than yours. It doesn't make a difference. That's just the type of trader I am. Cool. Thanks for sharing. Let's go out to our sector analysis, and you'll see that we haven't seen much move at all. What is our strongest and weakest? Real estate, the strongest. Guess why? All right, you guys know it. We had that huge jump in new home sales, and every single home builder got excited, and we saw purchases in LEN, Toll Brothers, KBH, KB Homes, anything that has to do with new construction just shot through the roof. Parabolic moves over the last week or so. So that's on top. Basic materials, weakest, right? They aren't the weakest. They have substantially come off of the bottom. We've seen some of those do pretty well. But overall, there's nothing really red on this. This is from Wednesday to Wednesday, remember. So a nice, very confident, comfortable, bullish market with a bullish outlook and some bullish traders. Look at that XLRE. Nice breakout. This would be a good trade. We should put this on our watch list. In fact, I don't know how deep the watch list will be today because I don't really want to carry over the 20 that we have, but I'll add XLE to the list, or XLRE to the list. I like it. And on the weak side is materials, and it's not even that weak. Materials is just having a little bit of a drop. It's too strong of a drop. I don't like to see him drop this fast, but hey, it is what it is after a nice breakout. I'd like it to stay above there. Hey, the day's not over. It could. But once again, a pullback to the 20-day moving average is healthy. It's a very nice bullish pattern. There's not a lot of bearish stuff out there. There truly isn't.
Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader?
I mean, there's always bears out there, but not like a truly bearish sector that's really just getting catastrophically beaten down that we want to avoid. There's none out there. In fact, I'm finding bears, slight bears, in almost every sector. So no real change from pre-holiday. There's not a lot to talk about, folks. The markets haven't been open that long. Still showing strength, bullish trends. All the markets are in bullish trends. Optimistic investor, bullish and confident in the sentiment. Nothing's really changed. I think it's going to take quite a bit to really shake somebody out of the trees here. The markets have been proved right all year. And if we are seeing this here at the bottom, the strong argument for a soft landing, it's looking like it could be, or is this that too aggressive? The soft landing could be mistaken with a market bottom and create a little bit more of a surge, which could put us back in inflationary worries. They call that double dip recession. Right now, we're playing the soft landing card. We'll see. So non-farm ADP and unemployment claims this week. We'll see where they go. We'll see what the Fed does with it or talks about it. But I'm not seeing any change outside of where we're already at. Okay, boy, that was a lot longer than I thought this class would be. I apologize. Let's get out to your trades and see if we can't add to our awesome list. All right, guys. Okay, let's go to, well, let's see the list that we had when I was going over it. Somebody had some trades on them. So here's that OKTA. Did I say that right? Yeah, all right. Oh, that Justin has a position on. Put diagonal spread 67 or 66 target for next week. Okay, cool. So this is what I was talking about a little earlier. A little worried about, I don't know why it's doing what it is, but it doesn't matter if you play the chart. Justin, I like it. 67, target of 66, sure. Just a little bit of a slip here down to this area. That's fine. Maybe back into this area, or this, I should say. A little higher, 67's fine. So yeah, diagonal spreads are great to play on this just in case it doesn't fall. So I like it. It's on the list from last week, so I'll just leave it out. Let's take a look. thoughts on MU? Let's see if I have any. Here we go. This is the technology that's not participating. That's a semiconductor that's not participating. Easy, bearish, right? Play something bearish. We are below the moving averages, broken support level, lower highs, descending triangle pattern. I'm not saying this is going south and going to fall apart forever or any of that, but take a look. This is a pretty, well, I'll go all the way back here. That's a pretty major area that is slipping through. It doesn't mean it couldn't turn and retest. Always, if you really want to do some fun stuff, go back and investigate. This is, oh gosh, I don't want to send you guys down rabbit holes. I just got done saying, just kind of let it play out. But if you want to, you can always find out what this was. Easy peasy. Find out the date, scroll down. I guarantee you there's a couple of articles about it. And then you can have a little bit of a fundamental support, finding, hey, why did this fall over? Why is it going lower? The why is something that you don't need as a trader, but it might be something to pass the time and keep you from pushing buttons is what's the most important. Yeah, nice little roll down to that 60. Let me put it down as a bear. Keep an eye on it. Something to look at. Thanks, Justin. Another one, Pan W. Palo Alto Nut. Well, really strong, waiting for a trigger out of the high and tight base. Yep, it's just one of those techs. It's a darling. We've seen Palo Alto Networks do really, really well for a while. Yes, wait for it to consolidate. High tight base, completely fine. Play a breakout. Targeted butterfly, it's an expensive one. That's why I say that immediately is because if you target a butterfly slightly out of the money, you're doing a 1x2x1 or some sort of combo of that. They are, I don't want to say inexpensive. It's relative, but you can afford it. Maybe do one, stuff like that. I don't know. But this is tough to buy straight call in, right? Cool, thanks. All right, Brett, I said I'd take a look at it. CFLT again. And let's walk through the scenarios. And I'm not going to really even look too much on the price action. Well, I'll kind of consolidate or look at both. What's tough about this is you're running into a super volatile situation where this is, do I want it or do I not want it? Right? Here's where they don't want it. Here's where they do want it. Here's something where they didn't want it and now they do. And this is kind of what you're saying. Hey, I got this volume here with this. There's a couple back in here. Usually it's at a pivot point. You can see high volume usually changes a bull to a bear or a bear to a bull. This right here almost looked like a blow off top. Boy, I circled a whole bunch of them because it's just choppy and it's all over the place. Well, where you're playing it now, and this was on our bull, wasn't it? Let's see. Yep, this is on our bull side, and we talked about, hey, it's stair-stepping down. It's got a sideways to it, but it's still technically in a bullish trend until it breaks this floor. Now, if it breaks this floor, based on, look at all these legs and shadows, this is a pretty big spot for CFLT, Confluent. And you can tell that there's a lot of, do I buy it, do I sell it, do I buy it, do I sell it? So it's got this, it's almost too tumultuous around this area. Very volatile, right? So don't play this game. Wait for it to get outside of that game. If it gets above here, you've got a higher probability of it sustaining. If it gets below here, you get a higher probability of it rolling over. There's no reason to try to play it through here. A lot of trades I'll throw out. I personally don't have this one, but I'd like to bring them class to class, and I do like it. It's just a little choppy through this area. But as your example or your question, saying that, hey, well, how do you look into this volume-wise? You kind of can't. You just have to throw it out because what you're seeing is opinion. What you need to do is get to price action. One of these ways is going to win, either this way or this way. That's where we want to play it. But that's a good topic and a good question. Okay, let's get to Newmont. And like I say, all of these are really great trades. We don't have to take them all. One might look better to you than another. That's what I love about individual trading. Everybody can be right. Butterfly at 42, 43, 44. Let's take a look at it. 42, 43, and 44. I like it. A little targeted butterfly back up this area. Right in between this and maybe this. little higher than that. I'm fine with that. And didn't get. Hey Dan, what's your expiration on that butterfly, if you have one? It might be kind of an interesting thing or a good point, but hopefully not too far out, right? But it's nice. I do like it. Okay, July. Yeah, July, which is 2.5 weeks. Totally fine. Totally fine. Let it play this game all day long. And if it's a targeted butterfly, you can wait for it and take it as soon as it gets to a certain point or a week before expiration. If you've got a bunch of different, if you've got multiple contracts on it, it's so fun to play that. I'll put down NEM sideways. Got to build some sort of a list. RRC for Robbie, he's got a 27, 29, 31. Let's take a look at it. Here's your 31, 29, 27. I like it. I like it. Really nice. Got a good range here of 30 and 26. Resistance right around that 28. So it could probably play between this and this. This is where he wants it, right there. Very nice. Thanks, Robbie. I'll put that RRC as another sideways. You guys can always take what we get from these classes and make it your own. So let me get rid of this, just in case you want to say, oh, geez, this looks a little bit more bullish. I'm thinking I might do like a 29.31. That's fine. I'm totally fine with that. These are ideas. Cool. All right, let's get to the home screen, and that was everything. Let me type this up, and I'll cut you loose. Okay, so here's our list. And I don't need to draw sideways on these sideways, do I? All right, that's where we're at. Okay. Well, we just started the week on a Wednesday. In my opinion, we did have Monday. I don't count it. So we've got a couple of days left. If your portfolio is fine, there's no reason why you need to push a button. If you have your 10 trades, your 15 trades, even if you're not making much money today or tomorrow, if all of your bulls are in bull trends and all of your bears are still within their trend, you just allow your portfolio to marinate. It has to work for you. A lot of my traders will confuse a stagnant, slowly moving portfolio with something that needs to be adjusted and changed. All right, guys, there's my soapbox one more time. Thanks for joining me. Appreciate it, and we'll talk to you next time. Bye, folks.